prices to be down year over year by 7.7%, but up again monthly, and the trend has been going in that direction as Dan Schaefer and Uri Man rejoined us to talk about home prices. Uri, first to you, what's your take on where we're going here in the pricing environment?
I think the pricing environment continues to be weak. I think that we're not at the bottom yet, and a lot of analysts are saying we still have another 5 to 10% drop in home prices before we could see a bottoming out here, even though some are saying that we already are at the bottom. I think the continued amount of foreclosures hitting the market will continue to affect prices, and the fact that more people are going to be losing their homes, unfortunately. The adjustable rate mortgages are going to have their rates recast. They're going to be very significant recasting of rates towards the end of 2010. So I don't see any improvement in prices in the near term.
What do you think, Dan?
Well, you know, you can look at the month over month, and it'd probably be flat to slightly down is my prediction on that. But it's the year over year that's going to make a difference. Remember, housing really started to tank in last October-November period.
Right.
So I'm curious what the year over year is going to look like, which I anticipate is going to be a lot more negative.
Than the 7+%. You think it'd be down a lot more than that?
Yeah, and I think that the trend is still going to continue because it's now the higher end homes and the higher end mortgages, the prime mortgages, that are now starting to see a significant delay in payments, and that is going to start to cut into the market.
All right, so the trend, you mean the downward trend is going to continue?
Downward trend, I think, is going to continue. I agree with Uri on that.
Okay, it's interesting that you both bring that up because the trend of late has been a improving one in the housing market, in the pricing environment. If you look at S&P Case-Shiller, as we are this morning, 5 straight months of gains, month over month, in home prices. So that, I mean, that's really the trend, Dan, isn't it?
Well, I look at the longer term trend. I'm looking at the year over year trend versus the month over month, because month over month you're going to get some bumps. And remember, right now we had some stimulus by the government that helped some of the home sales and stabilize certain prices in certain cities. What I'm more concerned about going
year
forward,
over year, we were down 9.4% in September and expected to be down 7.7% in October.
Right.
I'm not a big fan of this less bad, but that is less bad, right? I mean, it's
that is less
you'd rather
bad,
see it going that way than say down 12 or 13%, getting worse.
Exactly. But a few months do not make a trend, and we need to understand what happened after October and November of last year, and now the headwinds coming into 2010 with the prime mortgages being delayed, and those houses may start hitting the market. So
well,
there's another supply route that can come in here again.
Also, the interest rate environment will be interesting to watch as well, Uri, won't it? Because even if, and Dan and I are discussing what's going on month to month, year over year right now, but now 6 months out from now, where will interest rates be? Because we look at bond yields this week, for example, the 10-year here in the U.S., I believe, is at about a 5-month high, and now there's this idea that maybe the stock market gains are continued near term, but some of that money's coming out of the bond market. Yields are going up. That's tied to the mortgage rates. Do you think we'll have higher mortgage rates in a few months, and will that hurt housing and prices and purchases?
I do think that we'll have higher interest rates going towards the end of 2010, and I think that you'll see more adjustable rate mortgages being affected with the recasting of rates.
Right.
So I definitely think that'll have a negative effect on the housing market, to your point. It's just the number of distressed properties on the market that and number of new distressed properties that continue to hit the market will continue to put downward pressure on the housing market. We just don't. I don't see that we're at the bottom at this point. And I agree with Dan. I think that we're going to have more higher end homes hitting the market at lower prices, and these prime mortgages are now. People are not paying their mortgage payments and are trying to dump some of these higher-end homes. So I think we have a way to go before we hit the bottom.
What do you think, Dan, about interest rates? I mean, where do you think we'll be 6 months out, say?
This is an interesting call. I happen to be bullish on U.S. Treasuries and bearish on longer-term interest rates. Bullish so that the yields are going to come down. I'm looking at the Japanese history of what happened in their markets, and I'm looking for a deflationary environment here in the United States, at least for the next 2 years. So this little bump up in rates is really occurring due to market participants anticipating, and also the Treasury coming out with an auction yesterday, today, and tomorrow, which is the slowest point of the year. So you're getting a little bump up in rates here, a little bit of selling pressure on bonds. But if this deflationary environment does pan itself out and prices do start to drop, I don't see interest rates going up, because that's what caused the Great Depression, was the Fed raising rates as the economy was still stalling and in recession. And I just can't see that happening.
Do you think this Federal Reserve is going to hold off as long as it possibly can? I mean, that seems to be the indication,
Yes.
right, from Bernanke?
From Bernanke, he's a student of the 30s.
Yeah, right.
And, he said for an extended period of time, that's why this new CD thing with the banks coming to the Fed and locking up money for a year is his method of saying, look, we don't want to raise the Fed funds rate, but we want to take some liquidity out of the system at the same time. It's a good plan. I like that plan. Right. But I still think that he sees something down the road. And the fact that on Christmas Eve they put a no cap on Freddie Mac and Fannie Mae for the amount of money that they're going to be able to get when those loans start to default. They're backstopping the whole system there till 2012. What does he know that we don't know? So I still think that there's a major problem in the banking system.
All right. Dan, good thoughts there, and Uri as well. Thanks to both of you guys. We want to